What is going on, YouTube Nation? This is Darth Dividend. If you guys are new to my YouTube channel, make sure you subscribe and hit the notification bell so you don't miss future videos. This shift was probably top 10 my worst shifts I've ever been in. And, I've been really looking forward to making this video for you guys too. So I'm like drained, but I still have a little bit of gas in the tank to post this video for you guys. This is a high yield dividend stock that people love or hate. It's one of the most popular dividend stocks that people rave. I read these in Facebook groups, Reddit. People just absolutely love this. People attack each other. I mean, this you mention this symbol and people start going after each other, and it's a very popular one. It's has a lot of history, a lot of tradition to it. So you guys got to enjoy this one. This is going to be fun. I'm really going to tell you. Again, this is not financial advice. It's for entertainment purposes only. Disclaimer in my description. But I'm going to tell you the positive, the negatives, the pros, the cons, up, down, right, and left. This whole dividend stock. It's very interesting. Some people have that in their portfolio, and some people have been very successful with this stock as well. So let's check this out right now. And that stock is IEP, icahn Enterprises Common Stock. It has a dividend yield of 16.02%. PE ratio is 271.80. Volume is 525.31K. Market cap is 13.91 billion US dollars. Year range was 48.93 to 69.10. Day range was 49.60 to 50.30. So in its max against the S&P, it had ups and downs. So it's a little stagnant right now while the S&P is growing. So I'm just going to show you a few other things. Past 5 years, like I showed you, not doing too well against the S&P. Now, the year to date, it was doing well, and then it just took a huge nosedive. I'm going to show you how it looks since inception real quick. So this is a very volatile dividend stock. Right here in 1998, it was 948, jumped up to 114.27, and it hit 118.96. Took a big nosedive in 2009 at $24. Then it jumped up to 110, and then it's right here 72, 60, 54. So kind of interesting. Looks like one of those dinosaurs, the plates on their back. It's just up and down and up and down. So that's one thing to look into when you study IEP or icahn Enterprises. The most important thing is you need to study what's inside of it. This is what's important to understand this stock and this dividend stock. This is crucial. icahn Enterprises is a master limited partnership. It is a diversified holding company engaged in 8 primary business segments: investment, energy, automotive, food packaging, metals, real estate, home fashion, and pharma. icahn Enterprises is a Delaware master limited partnership. So there's a little bit more that you have to study inside of these guys before you make a call on them. So here's an overview of these guys. So, okay, they have investment, assets, energy, revenue, automotive, food packaging, metals, real estate, home fashion, pharma, their holding company. So this is their revenue. Okay, energy, they're actually doing really good. So here's a summary corporate organization chart. icahn Enterprises had investments with fair market value opportunity, 4.7 billion in investment funds. Here's their thing: specialty pharmaceutical company, provider of home textile products for nearly 200 years, consists of rental, commercial, real estate, property development, and associated resort activities. One of the largest independent metal recycling companies. So here's another thing. So icahn Automotive engaged in the distribution of automotive parts in the aftermarket as providing automotive services. CVR Energy, independent refiner and marketer of transportation fuels. Producer and distributor of nitrogen fertilizer products. So here's a few things. Now, their holdings. Now, look at their holdings percentage. Okay. Diversified subsidiary companies. CVR Energy, petroleum refiner, nitrogen fertilizer producer. Here's auto. Here's regional footprint, positioned to actively participate in consolidation of highly fragmented scrap metal market. So here's a home brands and home fashion. The evolution, here's a study of them. This is all transparent on their website. So their investment and legal team is capable of unlocking targets' hidden value. Okay, operation turnaround, strategic initiatives, corporate governance changes, financial balance sheet restructuring. So they got all this stuff. Deep team led by Carl Icahn. Okay. They got the portfolio managers. They're pretty transparent. One thing that we need to look at. Okay, so here's their companies and stuff. They're pretty transparent about their returns and everything. Okay, they're a little bit down. The returns in 2020 are a little bit down. 2019. Energy. Here's their section. Okay, net sales. They're going down. So that's one thing to keep an eye on. Automotive, pretty stagnant. Food packaging, going up slowly. Metals, not bad. I mean, it's up there. Real estate, uh-oh. Net sales and revenue, 106, 98, 102, 99. Home fashion, okay, it's up a little bit. Pharma, not bad. 3 to 52. Financial performance, I'll show you the one on macro trends that I really like with these guys. It's a little bit more transparent and it's a lot easier to read. So I'll go over that. Looking at their financial statements, we got a problem here. The revenue is decreasing. This is in millions of US dollars. Decreasing 19, 15, 7,000, 12, 11, 8, 6. You can blame the pandemic. Gross profit is negative. Operating income been negative. There's some issues. So they're a high yield dividend stock. You saw the dividend percentage. They're having some issues. I don't like those trends. They're going down. They don't look very strong to me. And that's one thing I have an issue with these guys. The other thing, which I'll show you, is their dividend history in a second. But here's a few other things. Okay, I'm noticing the annual revenue was a 6.67 decline in 2017, 23.63 decline, 31.92% decline. Annual revenue, it's an 11. Okay, that was a little bit of an increase. Okay, but September increase, the revenue, September 2021. Okay, it was a little bit of an increase, but overall, I don't see them going so, like super. Because I saw these declines, you know? It's going to take a little bit to convince me to like these guys. But here's the thing is their dividends. So 2005 it was 10 cents, then it was 15, then 25. A little bit of a hit in 2011, 10 cents, then $1, then 125, then 150, then 175, then $2. So it has a dividend yield of 16.02%, and the PE ratio is 277.44. Annual dividend is $8. Now, I'm not a financial advisor. This is not for entertainment purposes, only disclaimer in the description. First of all, the price per share has gone down. Okay, a 16.02% dividend yield. That appears to be a yield trap to me. PE ratio, it's high, but I don't know if this dividend is sustainable in the long run because, my gosh, the price per share, you know, I don't see a lot of confidence yet in these guys. And they're just going to continue to increase their dividend. But then what about their revenue? I mean, I showed you the trends of their revenue, and it just didn't look too attractive. And I considered buying these guys. I did have them on M1 Finance, and then I really studied them because I really understood the dividend stock and the art form of dividend investing. These are great dividend increases. Don't get me wrong, but I don't like the sustainability of its dividend. For right now, temporarily, from a temporary standpoint, it looks great, but in the long run, it just doesn't look too attractive to me with the way the dividend stock has. It just, the revenue for these guys is not very, it doesn't add up. They're going to continue to throw out these dividends, try to attract investors for yield trap, and I just don't like it. I really don't. So let me know what you think of this video. If you are new to this channel, make sure you subscribe and hit the notification bell so you don't miss future videos. Do you own IEP? Do you like it? I I personally, I think it's a yield trap. I think it right now looks great, but I don't know if it's that dividend is going to continue to increase, and I don't think it'll last. There were some boneheaded investments that were made with Icahn Enterprises as of late, and it really didn't help them out at all. Now, I know Carl Icahn, I did read some articles, he was looking at putting money in First Energy, but I don't, these guys don't impress me at all. Great, your dividend's awesome, your dividend's high. 16.02%, that scares me. And I want dividends to increase over time. I want them to be like a fine wine. I don't want them to be a one-hit wonder. And I believe that IEP is a one-hit wonder, and I'm avoiding it like a 10-foot pole. And I'm sorry, I'm avoiding it with a 10-foot pole. I won't touch it with a 10-foot pole. You can tell I'm exhausted. So let me know. You guys tell me. Do you have it? Do you not have it? You guys take care. I will post a video tomorrow. Have a good one.